right, it's the end of the week. Volatility plagued the Wall Street this week. The markets ended the week very mixed, largely flat, you'd have to say. The Sensex ended lower, the Nifty ended flat, while the mid-caps outperformed, gaining over 2%. Hello and welcome to the Editor's Roundtable. Today we put the spotlight on new age tech companies that had a smooth run this week. Pharma companies and the third quarter performance. We also take stock of the FII flows into the Wall Street today. I have editors with me, Ekta, Nigel and Nimesh. Guys, it was really quiet. I mean, this week, not too much happened, but still felt like a tiring week.
Understatement, I believe. Nifty, Bank Nifty is up just 5 points or 10 points.
Yeah.
I mean, it's crazy, you know, just 10 points moving the whole week. You can't be as flat as what it can be. Like, you know, it was very, very tough.
Better. The mid-caps did better. There was more, and unless you're, you know, looking at specific stocks and corporate groups.
I think this time it's the post-budget lull.
Yeah.
It's the post-earnings season lull. Everyone's just taking a break, right?
I thought everyone, you know, last week when we were on the Editors Roundtable, everyone said it's a tiring week and we're going to relax. But I think this week was even more tiring. Yeah, absolutely fagged out. Looking forward to the weekend.
It's called age, Nigel. It's called age.
That's what I didn't want to get there.
It's also the end of earnings season. I can't even count the number of companies coming out in the next couple of days.
So, you know what? I mean, a lot of things happened this week, right? So, for one, of course, we consolidated in a very tight range. So, by the end of the week, the Nifty was down just 0.3%, as Nimesh was also pointing out. But there is a 100-day moving average at which there's a bit of resistance for the index. So, the 17,943 level is a bit of a hurdle for the index on the upside. And there's no real trigger which can take the market either way. At least that's the sense that you're getting. One thing is for sure that the market was ready to punish a lot of weak earnings this week. So, whether it's Tata Steel, which was down 10% this week, Bharti Airtel, Divi's Laboratories were all the big losers of the week. And the Adani Group stocks, of course, they were in the news for all the right and wrong reasons. But by the end of the week, there was a bit of a recovery in the stock. So Adani Ports was up 17% this week. Adani Enterprises was up 17% as well. So these were the big highlights. But, you know, you get a sense that there's no real trigger for the market which can take it out of the range.
True.
Largely, we're stuck in that band.
That's right, Sona. No, and actually, a lot of people expected earnings will be a big trigger, but that's turned out to be a very mixed reaction, so to speak, across the board, whether it's banks, pharma, financial. It's been like a very mixed reaction as far as the earnings are concerned. From a market point of view this week, we all spoke about being a flattish market. Nifty, Bank Nifty, all were pretty much flat. The big talking point was the Adani saga, and it continues to, you know, boil down. We saw the MSCI reaction coming in, you know, on Thursday night. We reacted on Friday morning today, and as we speak, there is a further, you know, news about Moody's downgrading some of the Adani Group stocks. So that, I guess, that's been a big center point and a big talking point as well among a lot of the investors as well. As I said, you know, earnings to the reaction to earnings were quite mixed. The other important point to track would be the FI activity. You know, that's to some extent a bit positive for us because there is no big selling coming in from the larger FIs. Though there is no big buying coming in, but the selling intensity has definitely lowered in this week. That's the overall feedback. I guess, you know, from a Q point of view, both you know, the rate action both globally and locally will be very important. You know, a lot of economists were expecting that this will be the fag end of the rate hike. But after the hawkish stance by the RBI this week, looks like, you know, April could be another rate hike in India as well. And that could be the trend in global markets as well. So I think rates will be very important to track going forward. But the good part from this week was, despite all the noise about Adani Group, the FIs have done slightly buyers or at least less selling from the FIs in this week.
Well, you know, Nimesh, you know, Ekta as well as Sonia, it was like a test match. You play for 5 days and you don't score anything much because at what you started the week, you ended the week as well. But it was a far better week, and I'll tell you why. Because the Indian markets, after being slow starters, you know, at the start of 2023, well, they were relative outperformers for the week, and that was good news. Because if you compare the Indian markets' performance, compare it with what the developed markets did, or even compare it with a couple of those Asian markets, well, we were relatively better, or we were more or less in line. Remember, year to date, we are still underperformers, and portfolios felt good. Because the mid-cap and the small-cap indices, they were up between 1.5% to around 2% odd. So that's why portfolios did well. But we've been talking about the FI flows, and the outflows have cooled down a little bit. So that's encouraging, actually. But in the past month, that's for January, we have the data that's come out on NSDL, and they net sold close to $3.5 billion. And out of the 14 big sectors, 10 out of the 14, well, there were outflows. Which sectors saw the maximum outflows? Well, banks, obviously, they came in for a harder knock. Oil and gas as well as FMCG, the outflow numbers up for you on the screen. But there are some select sectors that actually saw inflows, even in a month where the FIs did sell. whether it was metals, cements, as well as autos. So make a quick point on metals. One observation is that for the past month, well, the inflows are more than $500 million. That's the best that we saw all the way since April 2022. In terms of other sectors that are getting a good amount of inflows, and there were some sectors like cement as well as pharma, well, they have seen inflows for 7 straight months in January 2023 itself, and that's between $1 billion to around $1.5 billion. So that as well is positive. And finally, capital goods. For the last many months, close to around 8 months, I think we had positive inflows. Well, they took a bit of a break in the month of January. So that's really the broad flow picture. The FI sold less, and I think the bulls will be quite happy looking at that. But let's see whether or not that can turn around to some extent. Sonia.
All right, thanks a lot for that. So let's see what happens in the week to come, whether the bulls continue their love affair with the market or not. It is incidentally Valentine's Day next week as well, right, on 14th. So whether the bulls have their love affair with the market, only time will tell, I guess.
And not to mention that on the 14th of Feb, we have the US Jan CPI data, which is out.
CPI data. The CPI data is
So
something.
let's see whether that romance is going to continue or not.
I'm all talking about romance, and then Ekta is like hit it out of the park with the macro data. Okay, guys, let me also tell you about what the market had a love affair with this week, right? It was a new age tech companies. So all of them came back in a big way. Paytm was the biggest mover this week, up 26%. PB Fintech was up 21%. Zomato was up 10%, and Nykaa as well was up 10%. In case you missed the key headlines, Paytm was really the one that rose to a 4-month high in terms of a stock performance. There was a double upgrade that came in from Macquarie on the back of good set of numbers. The payment volumes for Paytm went up 44% year on year. The number of loans were up about 103%. For Zomato, although the stock moved, the numbers were not that good. It still reported a net loss of 346 crores versus a loss of 250 crores quarter on quarter. So on the bottom line, the losses have actually gone up. It's the food delivery business that improved for Zomato, so that was a good thing. And the gross order value saw a very small growth of just about 1%. But what are brokerages saying now? Citi actually has cut their target price on Zomato to 76 from 85. And Goldman Sachs says that there is near-term potential pressure that they're expecting on profitability because of the launch of Zomato Gold as well as the dark store expansion. But on Paytm, you have a lot of positive views coming through. Macquarie says there's a very visible change in the approach of the management to deliver profits. They say they're positively surprised on the distribution of the financial services. And Goldman Sachs says that profitability is 3 quarters ahead of the guidance. So perhaps, that could mean maybe Paytm could see more of an upside in the weeks to come. The next stock to watch is Nykaa. It reports its numbers on Monday. So in terms of new age tech companies, that of course will be the place to watch.
I think, Sonia, with the new age companies, the other thing is the flow of supply coming in, whether it's Nykaa, whether it's going to be, we saw what happened in Paytm. There was a large block. Of course, the details will be out post-market status, so that's something to track. But that's a pain point. While the earnings have improved, but there is a constant supply of paper coming in from the larger FIs, and that's putting some bit of pressure on those new age companies, so to speak. The other big thing that we are tracking is, will the FIs warm up to the Indian summer? That's the big question that I'm asking a lot of investors who've come down to India for the India conferences. This week there were 4 large conferences: Citi, Edelweiss, which is now Nuvama. They had a conference. JM Finance had a BFSI conference, and Axis had a tech conference. The tech conference was very interesting. Just 20 companies, but unlisted, listed, both were participating. So the big, the big taking point or the big takeaway for me was one. In fact, I was fortunate today to speak to Bill Kennedy. He's the largest, one of the large FI investor into India. Been investing for more than 30 years. And, is like managing more than $10 billion globally as well. His big 2 bets for the last 25 years, HDFC and HDFC Bank. He's been holding for 25 years now. That's the kind of wealth he's created in those 2 stocks. And his big takeaway was, he's seeing a lot of opportunities in India, and he believes this could be India's decade. That's a big statement coming in from someone like Bill Kennedy, who's been watching India for so long. I spoke to a lot of companies as well as, FIs who participate in the conference. There are 4 or 5 big themes. One, what about the rural recovery? Is that going to be, that's going to be key for a lot of stocks, right? So that is something which was well debated. The other was the public capex picking up. That's going to be very critical ahead of the full election next year. So that's going to be very important. The China, of course, the China plus one opportunity which is coming for a lot of these companies in India, and the digitalization theme which you spoke about as well. So these were the 4 big themes which were talked about. I think, a lot of global investors are looking out for bottom-up opportunities in India now. Though India outperformed whole of last year, again, the big change for attitude for India is the fact that India was always considered as a beta market. I think that's for the first time after a big outperformance last year, that image has changed for India. Now investors are looking at whether India can be an alpha market. Irrespective of what happens in global markets, can India continue to outperform? So that's been a big change in the attitude as well from the larger FIs. So that was a big talking point as well that I picked up from the investors who came to India for the first time. And of course, we all hear what Bill Kennedy has to say, but the big talking point, big key takeaway from him was, will this be India's decade? And he believes this could be India's big decade.
I think, and Bill ke muh mein wo ghee shakar. We keep our SIPs going and participate in this big rally, which is going to be the decade for India. Then
Absolutely.
Fabulous.
Everyone be like Bill. 20 years back, he invested in HDFC and HDFC Bank and stayed put.
Stay put. I think that's a big message. Stay put.
Absolutely. Well, I think it's time for the doctor's check, right? A lot of pharma companies came out. Ekta, you've had a very, very busy week. Run us through some of the key talking points.
I'm only watching one sector, which is within the pharmaceutical space. That's the CDMO space, which is basically contract drug manufacturing. And that's basically for intermediates, drugs for big pharma companies, biotech, generic pharmas. That's what CDMO companies do. Now, which are these companies that I'm talking about? Divi's Labs, Gland Pharma, Loris Labs, Piramal Pharma, all of these companies released numbers just in the past couple of weeks, last 2 weeks odd. A couple of key takeaways because all of them disappointed with numbers, and I'll come to that. Now remember that all of them have different models when it comes to CDMO, but there were a couple of common takeaways. For example, there is price pressure in one of their key markets, which is basically the US. There is delayed decision making by bigger pharma companies at this point in time. There is some delayed payments that a couple of these companies are facing at this point, and there is a loss of key opportunities. Now we're talking about Molnupiravir, which was a big opportunity for Divi's Labs, or Paxlovid. Both of these are COVID-19 drugs by Merck and Pfizer respectively. Paxlovid for Loris Labs. So there has been a loss in opportunity as well. And there is an overall increase in raw material as well as input costs. Numbers have been impacted. Divi's Labs, it came in at a margin at a historical low. Gland Pharma, core markets, which is 70% of their business, was down 11%. Loris Labs, the CDMO business was fine this quarter, but the street is anticipating it'll probably see a tough FY24 because of a high base of FY23. Piramal Pharma, the big disappointment. Margins at 5.1%, loss at around 90 odd crores. Stocks have corrected from their 52-week highs. Divi's is down 39%, Gland is down over 60%, Loris is down around 45%, Piramal Pharma is down over 50%. And valuations, as you can see on the screen soon enough, is that they've also halved quite significantly for all of these CDMO companies. Is there any optimism? Yes, maybe. Challenges are probably likely to persist for the next 6 odd months, but there is structural demand in place at this point in time. If they get past that, there are also individual issues that companies have to solve. For example, Piramal Pharma has issues with regards to net debt, which is at over 4,000 odd crores. And Gland Pharma, there's always speculation with regards to the promoter and what their plans would be on the long term. So these are a couple of larger issues to watch out within the entire CDMO space in pharmaceuticals.
Okay, Ekta, thanks a lot for that. Well, let's slip into a quick break. On the other side of the break, we have a guest joining us. Pramod Gubbi of Marcellus Investment Managers will join in to help us prep for the week to come. Stay tuned. Welcome back. Thanks for staying with us on Editors Roundtable, where we're rounding up the week. It's been a week of consolidation, of course. Now we have the budget behind us. We have the interest rate cycle. Perhaps it's the end of that. So let's see how markets are being approached. Pramod Gubbi is joining in. He's the co-founder of Marcellus Investment Managers. Pramod, thanks for being with us. That's the big question. Most investors globally and locally believe that the worst of the rate tightening cycle is now behind us. If that is the case, do you think the Indian markets are moving upwards or trending higher as we move along?
Well, I mean, what happens in the short term is beyond our purview. But if you take a 3 to 5 year view, I think we position very strongly, both from an economic standpoint as well as from a market standpoint. The economy, as we know, we've been waiting for a capex cycle. We are perhaps at the beginning of that cycle. We've also seen the credit cycle pick up again. These are very early days. So you can look for both in terms of capacity creation, which in turn will have knock-on effects on job creation, disposable incomes, and consumption. So in every which way, the economy is looking good. But more importantly, I think the way foreign investors are looking at India has taken a change for the positive. Clearly, India are looking. I mean, foreign investors are looking at India in brighter light, given what's happened elsewhere as well. To that extent, we can expect this economic growth or recovery to attract that capital, which in turn should
Yes.
keep the markets in good show for the next 3 to 5 years.
All right. Hi, Pramod. This is Nigel on this side. Pramod, in the 3 to 5 year period, obviously India is finding some preference, and some moves in the near term they work in your favor, some don't. Now, I think y'all had exited or lightened your position on ITC, and I think y'all had loaded up further on into HDFC Life. In the near term, it doesn't seem to be working out, but there will be some rationale out there. So, give us your take, particularly post the recent changes in the life insurance space.
Yeah, absolutely. Of course, when you're managing a portfolio, the whole idea of managing a portfolio is to diversify. Not all
Yeah.
bets work out. But so far, clearly, it hasn't worked out. Our reasons for exiting ITC was one of less than ideal capital allocation, given the cash that's accumulating on the balance sheet is creating a drag on returns on capital. And returns on capital is one of the core aspects of our investment philosophy. We like businesses which drive significant high returns on capital over cost of capital, at the same time are able to deploy that excess profits back into the business to fund future growth. That was our concern with ITC. The fact that HDFC Life hasn't worked out, of course, what happened earlier this week in terms of the budget is a matter of concern, no doubt, because life insurance, particularly from a protection standpoint, which is the term insurance policies, not the investment products, is significantly underpenetrated in our country. And to that extent, it is considered as a sunrise sector. And most sunrise sectors do require some sort of incentive from a government's perspective, either in the form of taxation or otherwise, to build that penetration, particularly in a country like ours where there's no social security. Increasing penetration of life insurance is a social good. To that extent, we were a bit surprised with that move. Having said that, there are other investment products within life insurance clearly do not require the same amount of tax benefits as a driver. But given this level of underpenetration, we reckon there's plenty of growth. We do require increased awareness amongst consumers to buy protection and protect their family's future should something untoward happen to the bread earner in the family. But you do require some push or nudge from the government in the form of incentives. So
Yes.
we're quite positive on that aspect of the life insurance sector.
All right. Pramod, I wanted your thoughts with regards to the entire PSU banking space. That was a clear outperformer in the previous year. Now there are fears that maybe there could be chinks in the armor when it comes to asset quality. Would you be as bullish in terms of the PSU banking space as investors were in the previous year? And do you think that threat on asset quality could probably be a formidable one?
Well, I mean, it's the early stages of the credit cycle. Typically, the asset quality issues come towards the end when you've had a strong period of credit growth and when you've had repayments due from borrowers and the business cycle is turned downwards, which curtails that repayment capability. So I guess we are a little while away from those asset quality issues coming up. But from our perspective at Marcellus, we are longer-term investors. We take a longer-term view to the extent that historically PSU banks have had issues around asset quality on a cross-cycle basis. Even if it means that in the shorter term those issues may not come in, we are unlikely to get any exposure to PSU banks. More importantly, we also look at cross-cycle ROEs. We require ROEs to be greater than 15%. We believe that's the rough cost of capital in this country. To the extent that most PSU banks are still not delivering ROEs north of 15% on a cross-cycle basis, we stay away from them.
Hi, Pramod. What about IT? While near term we all know about the headwinds, but with the longer term view, are you looking at buying into IT space? And especially within IT, will you bet on the mid-cap IT because they've corrected sharper than the large-cap IT names in India?
Yeah, so, I mean, they've corrected sharper, but they did well also in the upcycle. To that extent, it's sort of normalized. Yes, from a longer-term perspective, we continue to be bullish on IT services. We reckon the digitization, the shift to cloud computing, and now with artificial intelligence also coming in, I think all of our lives will be surrounded by some aspect of digital, which requires to be managed. And Indian IT services have clearly demonstrated their ability to do this over the last 4 decades. I don't see any reason that should change. Between large and cap, we've always maintained IT is more of a supply side issue as far as competitive advantage is concerned. Because technologies continue to change quite rapidly, be able to hire and train engineers and retrain engineers becomes a critical aspect of competitive advantage. So amongst the larger ones, we've seen both TCS and Infosys have built massive training infrastructure, and that ability to get staff into projects very quickly on new technologies becomes a critical competitive advantage, and hence we prefer these over the remaining companies.
All right, Pramod, final question before we let you go. We're getting into a weekend, so let's lighten up the mood a little bit. Paints will have been positive on, the largest paint company out there. But what about Daru? I mean, what about some of these, alcohol beverage companies out there? Some have disappointed. Some of them have immense potential. But your take on them?
Yeah, I mean, it's one of those classical things, right? Often people chase growth. Not everything that with high growth will actually make money for investors. You also need to consider the other aspects. In this case, of course, there are companies which are dominant as far as competitive position is concerned. But the regulatory aspects of the alcohol industry has always been a concern for us. Where the value gets captured, whether at the company end or the taxman's end, is always a bit of concern when it comes to heavily regulated industries like this. To that extent, we've stayed away.
Sure.
But otherwise, there are some very fabulous companies with very strong brands and competitive position. But yeah, the government and the regulatory interference is something that has made us wary about it.
Okay, time to perhaps go and sample those strong brands, right? With the weekend coming up. Thanks a lot for joining in and have a great weekend. And folks, thanks for watching Editor's Roundtable. Any weekend plans that you guys have?
I don't have any plans. No. Sorry.
A lot of earnings.
Consumption story.
Consumption.
I think you should do something for UBL. Yeah?
Participating in the consumption
I was shocked
story.
this morning when they said that it was a disappointing set. I said, we didn't do enough.
Worst quarter in almost like 2 years now.
Maybe it was the winters.
Okay, guys, take one for the team. Come on, you can. Well, with that, it's a wrap on this edition of Editor's Roundtable. Thanks a lot for watching. Have a good one.